Good afternoon, everybody. Let's take a look at what's going on here. Give me a second. All right, so pre-market this morning, I had the thought maybe the transports would play some catch up, and clearly they are. You can see that correction bar that I pointed out to this morning. So now we've got this breakout, which here goes Dan. Let me mute him. um, Hold on a second here. There we go. So breakouts. Do we want to trade this breakout? It's a choice. I don't know how high it'll go, but when I look at this chart and I say, well, minor resistance is right here on a declining 50 MA, I'm just not interested. I look at this and say, where am I going to put my stop? So that isn't even a good spot. You got to put it under the correction bar to start, which means share sizing it there. So it may go higher. It certainly looks like it will if it'll close like this, and we'll see what develops. Now, if we were lucky enough to potentially get, like a 1, 2, 3, 4, where it went sideways and another correction bar, then I'd be more interested because it had corrected further and I'd have a stronger belief that it could go higher and maybe get to the top of that range, give or take. Clearly, that's not going to happen today. So as we look at this, and I look at an index, and now I want to look at stocks within it. The same possibly there are stocks within it that are more attractive than the index itself. And so I've got this sorted by percent change on the day. That's right at converging 50 and 200, so I'm not interested in that. Delta, top there. Again, anything in the downtrend, I'm primarily not going to be really that interested in, especially if there's a declining moving average above and there's pivot highs. So here's an example of a wide range bar yesterday, and it's pushed up. It showed relative strength to the index, and now it's up at the top of the trading range, so nothing to do there. Bottoming, declining M8, not interested. FedEx. Now, these kind of patterns are better used for credit spreads. If there was premium down below here and you'd have to go out to next week, but this pattern is suggestive that it won't go back down here. You have to look to see earnings. Earnings aren't coming out, so that's okay. Now, directionally, it's somewhat better. Look where the 50 MA is, that high and unfilled gap. So as a catch-up trade, it's better. I certainly wouldn't go all in. It'd be better to do a smaller position with a stop under here. Maybe you get an ad. This one's been outperforming. It's become an institutional favorite. That's going to report earnings next week. LUV, that already made a substantial move up in a moving average. So as I flip through these, same idea. This one is outperformed. So what else is doing well? Well, semiconductors are doing well. Now, it looks like they're going to close above the declining 50. So these potentially can continue to move higher toward that pivot high and maybe the 200. We'll see. Looking at what's doing better. So that's already moved up. On semiconductor, this has been touted in Barron's at least twice, maybe 3 times, and they started touting it up here. And you see from there it went down another 50%. So I would assume since Barron's touted it, it's fundamentally good, but clearly something wrong. Uh, there is within the industry, but this is underperformed. But maybe it's time that this actually starts to catch up. That pivot high up there would be an initial first stopping point. And so, as you can see, many, if not all of these are in downtrends. AMAT tends to be an outperformer when semiconductors are in favor. And you can see here this head and shoulders type of a bottom or downside shakeout, up and sideways. So I like that, even directionally, for the industry continuing to go higher. This one tends to do better. This one's up into resistance already, downtrend and bottoming, TSM tends to lead, and it's already up at the 200. So when I see others that have already performed, yeah, AMAC could play catch up, but it does give you some, reservation how much AMAC could go up. So again, don't put on large positions. AVGO, downside breakout sideways, should continue to outperform. Another institutional favorite when the sector's in favor. Marvel, it tends to do well when the industry is in favor. Clearly, it's gotten decimated, down over 50%, actually from the high to the low, 62%. That's a big ouch. Intel continues to underperform. Again, some others. Uh, Regional banks look like they could play some catch up. This leads me to believe if financials can do well, the S&Ps should be able to go higher into next week. I covered the internals were close to giving a sell. I don't know where they're at now. I don't look at them until the close, but we'll see if that materializes at the end of the day and over the weekend. Interest rates moving up a little bit. Financials outperforming. Qs up at the 200 and a pivot high. Not good for a broader markets, a belief that it's going higher in the short term. S&Ps have room to the 200. 5,700 is a big open interest in puts and calls. It tends to be a stall point and kind of get pinned there. That doesn't mean it can't get through it, but what it does mean is if it pokes up to the 200, it's likely to get pulled back down again, especially with the resistance directly to the left. So diamonds could play some catch up. I mentioned pre-market about UNH. It's starting to make a turn. It was on $400, so a big whole number. So this maybe can help the Dow. Right? The Dow being price weighted, not market cap weighted. If this starts to move up, it's going to help propel the Dow higher. Biotech's backing off. Interesting. Interest rates, short-term interest rates. This is what we use as a measure for what the Fed is likely to do. So there's been speculation they're going to do nothing, which is what the Fed chair said, until more evidence. It started to break down. More people thinking, oh, they're going to cut. Even this morning I heard they said they're going to cut 3 times. I don't know. This is moving back up again. So clearly there's uncertainty continuing about what they're going to do. Oil can't get a turn going. And what else? I'll quickly look through some of these. They're all coming up to areas of resistance, and that suggests that the upside is limited here. And it's just been a really erratic move, as you all know. Down, up, down, sideways, lots of chop, and the ranges are contracting here. Maybe that can go higher. Communication services, you got Meta in there, Electronic Arts, that broke out today. Backed off a lot, but as long as it closes above here, some sideways consolidation next week could lead to a move up. Disney plays some catch up. Oh, big bottoming Dale correction bar there. That's interesting. We'll keep an eye on that for next week. Google, that little buy setup within a downtrend. Netflix just keeps chugging along. And again, semiconductors here within the sectors doing well. So we'll see where things end here today. So far, markets are holding up pretty darn well. Let's get the S&Ps here one more time. Yeah, they poked up there. There was a tick extreme on that poke up, and it just stalled it. So come and pull back here to where buyers should want to show up. We'll see if they do. And I think until we get a close under a prior daily low, the assumption is that buyers will continue to step up and moving it up toward that 200 MA into next week. As always, if you have questions, email us, Greg and Dan at Master Trader.